We'll take a look at all that after, but we're just gonna get going here. Some people want to join in a little bit later, that's fine. But so hopping into today, want to do a quick little spiel on some price action, just some of the ways I trade, and then we'll kind of break down some of the trades I took today, maybe some of the other trades from this week, or some trades you guys have as well, depending on what you guys want to see. But so hopping into my strategy, so the main way I trade is through fair value gaps. If any of you guys are unfamiliar, I'll just do a quick little breakdown of that. If you are familiar, just bear with me for a few minutes here. So basically what it is, it's a three candle chart pattern, excuse me. So basically you have your first candle, you have your impulse candle, and then you have a third candle. You know, the wicks can be whatever they want. You can have a wick down here, you can have like a little wick right here. As long as this candle body or wick doesn't intersect with this candle here, you have a fair value gap. So say it's right here, that's good. But let's say instead of there, this wick's down into here, no fair value gap. So oops. You guys see why though? Says this wick intersects with this wick. Same thing if this body was down here and intersected with this one, it'd be no good. It's no fair value gap. But say we have a wick like this, we now have a fair value gap. So how I'd mark that out is either to wick. If there's a wick here, say there's no wick, then I'd go from body to wick. Wherever this candle, the top of this one reaches the bottom of this one, as long as they don't intersect. So since I'm doing wick to wick here, drawing it out like that, just so these two connect. I know these are all the same color, but just pretend they're not. But anyway, look for a candle to come down and test it, something like this. And ideally, I want to see some type of bullish reaction. This is all in the 5 minute, by the way, where I trade this. So these are all 5 minute candles. So once I get this candle to come test it, I'm waiting for this 5 minute close. And if we can get a good bullish reaction from that fair value gap, I'm looking to enter on the close of this candle, and stop would be a little bit below this signal candle that confirmed the entry on the fair value gap. And first price target is generally going to be that high day, at least the 1-to-1 R to R point, but typically that'll line up pretty close to a high day point since it's an upside play. So that's typically where PT1 would be for me. Again, I like to just have this. You can put it right below, but I like to give it a little bit of wiggle room because sometimes you get wicked around and it'll play around a little bit, especially more on SPY. I found Qs could be a little bit cleaner, but SPY likes to play around sometimes. So you want to just give it a little bit of room. But that's typically just the gist of a fair value gap. So there's two main ways that I'll look to enter those. One will be on a regular trend where you see something like this trend entry, bang, continue up. This is actually a trade I took today. We'll go over a little bit later. In a second, what if the candle events are on closes super high up? Yeah, so great question, or great answer, Jonathan. So that's actually something I've dealt with. I should like put all that back on. But to say it, that candle closes pretty much near the high day. What you can do, because I've actually dealt with this, I've actually thought about a good amount. So you can either place your stop just below that. It'll be easier if I just visually do this. Oh gosh, I have to get all these back out. Bear with me for a second. Get my beautiful drawings. Okay, so save this candle, test it, and then we close like this. We're way the freaking heck back up there. So this to me, there's two different ways I'll attack this. So either I found, since a high day is typically my first price target and we close so close to it already, you either got to get in here, leave your stop below here and be okay with this coming up, because sometimes what it'll do, it'll come up like this and then you'll get some, wicking action where it'll come back down, then you get like some crazy wick like this at the high. But all I'm trying to say is sometimes it'll like mess around a little bit more since you're buying so close to the high a day. That's typically a price target. But if you can't trim there because the R to R doesn't make sense, you have to be either okay with this wicking it, getting a little bit of that trickier action. Or for me, I might just skip the trade all in all. If it's a good enough opportunity, I'll take it. But if, like here, like your risk is all the way down here and your ideal price target is right here. So the R to R doesn't make sense to trim there. So you either got to be okay with some of this wonky action and just leave that stop in place, or just skip the trade, move on to the next. Yeah. Cool. How many times will you play that gap? So I typically, once the fair value gap gets tested first, once it gets tested, I'll usually take it off. So I don't, if it gets tested a second time, I'm not really interested. But another thing, on top of that, when these are formed, I typically like to see them get tested pretty much right away. Like I wouldn't be interested if this had gone up, continued its trend, found selling, and then came down into it after. I found personally they just work less of the time versus when they form and then the next candle or two, they come down and test it, and then you continue that trend. If you go up, you're continuing the trend, you find selling, and then you kind of dump into it. I found those are lower probability. And the same thing, say we had this candle here and this next candle opened up like this. And instead of coming down, we tried to break that high day and we failed the high day. And then we dump into it like that. I found those are lower probability as well. So ideally, those are formed. I want to see that get tested on the next 1 to 2, maybe 3 candles or so, and then see that push up. I don't really want it to, which it's completely fine if it works for you, but just for me personally, I found that the best ones for me have get tested nearly right away and continue that trend up in this case. So moving on to the two different ways, like I was mentioning, is one way I'll look for the fair value gaps on trend entries like we saw today. We'll go over that a little bit later. The second way I'll look to enter is on a counter trend. So on trending days like this, like what was this? Wednesday, I think. What's today? Thursday? Yeah, Wednesday. Okay. So something like this, for me to play counter trend, I'm not looking to say like, okay, this is going to be the top. I want to short here, or this is going to be the top, or this is going to be the top. I'm not looking to try to predict that top. Just I've done that in the past, and you can kind of just, like the opposite of trying to catch a falling knife, it can catch a flying knife. I don't know what the opposite of that, but anyway, on these strong trending days, what I'll do is look for a break of the trend before looking to short. And all a trend is defined. A trend up is a candle down and then a candle up, and then you have your higher low spot. So a move down and a move up. Since this is the lower of those two candles, this is your higher low spot right here, right there. Okay, like that. See, move down, then move up. That's your higher low spot. Move down, then move up. That's your higher low. Does that make sense to you guys? How that kind of trend action works? It'd be the same thing if you're moving down. See if we have anything. Yeah, like something like this. Move up, then move down. That's your lower high. Move up, move down. That's your lower high because that's the higher of the two candles there. That's all a lower high is. A move up, then a move down, and you have a lower high. That's it. That makes sense to you guys? Excuse me. Okay, perfect. So moving on through that, the way to then break that trend is to close below it. And I'm looking at all of this on the 5 minutes. So as we discussed, move down, then move up. So this is our 5 minute higher low spot. So for us to break this trend, I want to see one of these candles. Doesn't really matter which candle it is, but as long as this is the higher low, like if we see move down and move up, if it came over here, this is now our higher low spot. So we hadn't made that higher low yet. What I want to see is say this candle right here, bearish candle, come down, close below that higher low spot. Our uptrend has now been broken. And from there, I'll then look for, let's say like a candle like this, like it doesn't matter what this is, but something like that. And then for us to form a fair value gap, and then I'm looking to get in on the lower high to play down. So instead, in trending markets, instead of trying to predict the top, what I'm doing is I'm letting the trend break. Then I'm looking to get on the lower high second entry of the new trend that's just being formed. So for me, that's a bit of a safer entry instead of, if you can make money like getting the exact top, all props to you. But for me, I like to see that trend break first. And once that trend breaks, then I'm looking to get on the lower high, the second entry of the new trend that we just formed. Does that make sense to you guys? I'll make sure I explain that the right way. And I have an example of this too that we can look at. That's actually coming into play right now. So, so we'll take a look at the daily. Yeah, so it'd be the same as the first example we looked at. So say we have that downside fair value gap, it's all the same thing. So we get that candle, the retest it here, say, we have the rest of it, and then this is the candle that's coming up to test it. Say we have this little wick or something like that. So my stop would be beyond this candle, but I personally just like to give it a little bit of wiggle room beyond that candle. You can put it exactly beyond the candle if that makes sense for you, but I like to give it a little wiggle room. You can leave it beyond the fair value gap. That really just depends on what your risk tolerance is. I like to just give it a little wiggle room beyond that, the testing candle of the fair value gap. Let me twist it. But taking a look at the daily, as I was mentioning, we have a live example going on right now. So you see on the daily, we've been trending up. See, move down, then move up, move down, then move up. So we've been trending up. But what happened recently? Move down, then move up, and we closed below it. This was our higher low spot right here. This daily low right there. Bang. And we closed below it. And now we are downtrending. See here, we're putting a lower high and we're now downtrending. So to get back to bullish structure on the daily, we need to close above. This is our current lower high spot. So a close above the lower high spot breaks downtrend structure. So right now we have shifted to downtrend structure on the daily for SPY. That's not saying we're going to tank, that's just purely looking at technicals. So, little live example, pretty much exactly what I was talking about. Actually pretty much to the T, because look at this. Daily wise, we did create a fair value gap right here. Yeah, look how cool this is. Didn't plan this out or anything. I mean, we overshot it a little bit, but see that fair value gap broke up trend structure, fair value gap created, came up to retest it. We're rejecting back down. So it's pretty much exactly what I was just talking about on the lower time frame, but happening on the daily. Kind of cool how that worked out, but overshot this a little bit. But regardless, the idea is there. So something to keep in mind. We gotta take a quick look at the Qs. It's gonna be a little messy. Clean it up. The Qs are actually a little different because we broke uptrend structure here, but we broke back to the upside. So, it's a little bit. Qs are just this had such a weird divergence this week. I don't know if you guys have noticed at all, but the Qs and SPY have just been like completely opposite, at least for some of the early morning stuff. Not exactly sure why that is, but anyway, let's off to the next topic. So, okay, trade executions. So when I'm in a trade, I'll typically break it down to a 3 trim structure, and I'll show you guys what I mean by that. So again, I wish I didn't delete that example, but anyway, so let's say the entry is here, high day. Let me do a line instead. Entries here, high days up here, whatever it is. So you're in here looking for at least a 1-to-1 to trim. So you're risking $100. I need to see at least $100 to get that first trim off, just to make the R to R make sense. So at least a 1-to-1. If you want to go with, say, a high day, if that matches that 1-to-1, if it's more, if you want to put more risk on or willing to hold that longer, hold to the high day, that's fine. Next, I'll set that stop to a break even or in profit if it really runs on that first push, but generally set stop to break even. And then I'm on a hard PT2. So whatever that is, I'll show kind of where I find the price targets in a second. But something I talked with Judy a good about is just really having that mentality to hold to that next price target, because something I dealt with for a little while was just saying, okay, in profit now, looking at the money a little bit. Let me just get out this, excuse me, a little bit early. This is fine. And then literally 2-3 minutes later, you see like the biggest move you've ever seen. And that happened like 3 times in a row. So I was like, okay, let me work on this. Let me figure something out. And what we kind of talked about was just kind of having like an F it mentality, like just setting that hard stop, saying, okay, this is either going to hit my price target, it's going to hit the break even or in profit stop, and that's it. No, it's only going to be one of those 2 things. It's not going to be, I'm getting out here, just because I want to, because the money looks good, whatever it is. No, it's either hitting that break even stop or it's hitting that price target, and there's no in between, whatever that means, whether setting those, orders and kind of stepping away from your eyes being glued to the chart, whatever you need to do, just say, okay, this is either hitting price target or it's hitting break even, and then that's it. And how has it needed? I'm not sure what you mean. Oh, it's been good. Yeah, it's been a lot better. So it definitely helps. Yeah, sorry, I was kind of confused what you said, but it definitely helps because once you kind of put yourself out of that, and you take the option away of saying, okay, well, I can just get out here because this little thing or that little thing. Once you take that option away, you see those often will run a lot better for you because you're not looking at every tick and maybe some little tick thing that might have set me off like, okay, I got to get out now. You're not really looking at that close. So kind of gives it more breathing room. Yeah, for sure. That was a big help for me. So I thought I'd share that with you guys as well. It's a big problem I face. Yeah. So again, CJ, I would just say, just try it. It's really helped me out. Just have that effort mentality. Like I do not care what my emotions are telling me. I have to stop at break even. It's either gonna hit the break even. I'm already in green trade regardless. It's gonna hit the break even or it's gonna hit my price target. There's no in between. If there's some glaring red flag that comes out, something that happens that really is a big red flag, then sure. But especially just trying to build that muscle of just saying, okay, I'm gonna hold this, just have the effort mentality. Like I do not care. I'm holding this. All that noise is just noise. I'm gonna follow my plan. And that's helped me a good amount. So once I get that second trim off, my third and kind of final piece will just be beyond the previous 5 minute candle. So let's say something like I am in here. So as this moves down, my stop would just be oh my gosh, would be a break above the previous 5 minute candle. Like this, probably would look for a little bit something more substantial than this, but say, okay, above the previous five, now it's above that five, above that five, above that five, above that five, and kind of just do like that and let it move down until it hits the price target or until it gets a strong break. Like something like this, where okay, it's breaking above that previous five, I'm out there. And that's just personally how I let those run. So actually finding the price targets, I don't like to get too complicated with it, but I like to see at least like a higher time frame, something like the hourly where we get a little bit more significance in like a 5 minute. So something like this, I'll look for, say I'm in like a calls position down here or something, looking for areas of trim. I'll say, okay, maybe this 607 will be good. Why is that? See support, 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 support. Just any areas that could act as like a change of trend or could see a lot of, in this case, sellers since I'm in a buy position. Any areas like that where you could see significant action at also as price targets. Just I personally like to see it just on the higher time frames. You can use lower time frame price targets if you want. Nothing wrong with that. But me, same thing here like this. Maybe some area like this was not the best. It's a little bit, but maybe somewhere like this where you get like the reject area. This one isn't as clean, but you get some action at this. Doesn't have to be perfect, just wherever you see any area that could act as a reversal point. I like to set those as the price targets. Okay, so we get next. Okay, so two ways I'll look to not enter on FVGs because you get a lot formed, but that doesn't mean that every FVG is a good FVG. So two ways that kind of set as a red flag for me in terms of looking for an entry are context, location, and liquidity sweeps. Something that I've dealt with a few times this week is the second. I'll go over that. Just kind of bit me a couple, I think twice. So definitely still fresh in my mind. But the first one is um, context location. So say this is a key zone up here. I think this is like a weaker zone, but say this was a key zone right up here, and we were getting a trend entry and something like this, get you a nice impulse candle, get your little whatever right there. Nice little drawing like that. So you get this right here, and this is your bullish FVG. This is not something I would look to be taking right here. So if we come into a key area like that, and our upside entry is presented like right below it, I'm not looking to enter that because essentially you're fading into a key area, even though an FVG is being presented. I typically don't like to fade into those areas because you're basically betting that that area is going to break. You're betting on a breakout of that level. So what I like to do let that level break first and then get the FVG entry. You know, you can take these still, but for me, that's just one way. I typically don't like to see those entries. And a second way with the context and location is if we're in balanced conditions, say on the hourly, all balance means is kind of sideways, chop action. See, like this is more trend action here. See if we can find some balance. Um, it's a good thing. This is okay. Let me clean this up first. Yeah, it was a little bit more choppy, but I'm talking more of like a hourly balance, not just like on a per day basis. So I'm talking about like something like this. Like you see this, like, yeah, let me zoom in a bit. Like we're in like multiple days. We're in a balance like this. See just sideways action like this. This is balance. This is trending action. This is balance. So the second area where I would not be interested in buying those FVG entries would be at the balance extremes. So say we're at like right here, I'm not looking to buy into that level. Say we're right here, I'm not looking to sell into that level just because when you're in balanced conditions, your best RR from what I found at least is in fading those extremes, which just means selling the high, buying that low. So until we break the balance, which we did here, see we finally broke it. I'm not looking to fade those levels because again, you're betting on the break of that key level instead of letting it break first and then playing it. So for me, I just those are two ways context wise I won't be looking for an entry. And the second was liquidity. We'll take a look at that. Let's see, where's the first one? Let's say Thursday, Wednesday, Tuesday, Monday. Wait, Thursday, Wednesday, Tuesday, Monday. What was this entry? That was on the queues actually. Thursday, Wednesday, Tuesday. Okay, right here. So this wasn't just not a good example at all, actually. Yeah, we'll look at it anyway. So this is see here. We had this. This isn't really a good FVG at all. You can see it just wasn't really much to it. Like I typically like to see a little bit more to it, but this technically is a fair value gap. So for me, we came up, swept this high day, and then came back. See here, failed the high, and then came back into this FVG, which it wasn't really a great zone. So this isn't the best example, but regardless, swept the high and came into it. We see we tried to make an entry candle, turn it to a trap candle, fake out, dumped it. So that's one example right there. I think we had the next day as well. Was it Thursday, Wednesday, Tuesday? Tuesday. Yeah, Tuesday. Okay. So let me just clean up this chart up. So same thing here. We had two sweeps. So this is actually one of the examples I talked about earlier where, you know, you have this fair value gap. This is actually a trade I ended up losing on. Something I actually started to adjust from. So, you know, every loss isn't a loss, you know, if you can actually learn from it. So this was actually pretty helpful for me. Yeah, so liquidity sweep just means you have like a point of resistance, whether it be a high day, higher time frame, resistance, pre-market high, pre-market low. Like say this was a pre-market low, if I can draw it, and we came down, say we get a candle like this, we tried to push below, came like that, and then close like this. We tried to like this candle at one point like that, we were breaking below that, then we got pushed back up, close like that. We swept that liquidity. You see, like we try to break out, sellers try to get in, buyers stopped out, buyers their stops got hit below that resistance or the support point, sellers hop in chasing that breakout, pump back in, sellers have to buy their position back, fueling that further move up. Those buyers stopping out, they're selling to larger buyers that were just using them as liquidity. Yeah, it's literally what it means. The word is liquidity sweep. They're just sweeping that liquidity, getting those people sell their buy positions. They're gonna buy it. People chase to sell. They're gonna have to buy their position back, fuel move up. That's all I mean by that. So on this day, you see here, this is what I was talking about earlier when we get the FEG. I want to see get tested right away. And this is why. So when we got this fair value gap, we had this high day at this point right here. We tried to break it and immediately got slammed down. So that's me saying buyers See that volume was fading actually. So there's a lack of buy interest above the highs, and the market's an auction. So it's going to move up to the last buyer buys or the last seller sells. Some buyers, if they're not interested in higher prices, the market will move down to test lower prices to see where buyers find fair value. So for this, we swept liquidity. Buyers didn't find value above the highs, and or sellers were selling the highs pretty hard, and we pushed down. After that, again, trap entry, gave a signal candle, turned into a trap entry. So that's why I want to see this get tested pretty much right away. Don't want to see buyers attempt that high, get failed, and then come down and get swept. Then you're in a trap play, and you get this happen where you just dump all day. But so those are pretty much the two ways that are more red flags for me in terms of trying to get an entry. Let's head over back to today. I think it's up next. Yep. Okay. So let's take a look at the example from today. Okay. So from today, we had early chop action and wasn't really anything great until we had this move down, swept this. This is exactly what I was talking about with a liquidity sweep. So came down, swept this liquidity, tried to break below this pre-market lows, impulse candle down through it, but then came back up, caught all this liquidity, and what did we do? Shot that back up. Do you see what I mean by that, CJ? Where you kind of get that move down, the fake out, they're taking up all that liquidity, and they just rip it in your face and just, shoot it to the other side. I think it was even better on the Qs. Yeah, even better on the Qs. You can see this. Tried to shoot down, came back up, and look at that. Buyers getting stopped out, sellers chasing that low break. They're gonna have to sell their position now, fueling that further move up. Yeah, so that's all it is. Pretty good example from today. Nice liquidity sweep there, came up, formed multiple FVGs. See one right here. Chart it live. Fair value gap, bang, right there. These candles do not intersect, so you have one right here, second one right here, and then the third one was right here, the one that I played personally. Oops. Button. Oh my gosh. There we go. Technical difficulties for a second there. Trying to get this thing to go away. Whatever. So we got this test of it, came back down. You can see wasn't the best reaction, but enough of a reaction from buyers here for me to give this a test. Entered right on the close of this 5 minute, as I mentioned. Let this candle close. Entered here. Stop was I gave it a little bit of wiggle room, so probably around it here. Just give a little bit of room below that low. Trimmed on the pop up. These contracts did pretty well. Trimmed up here, and this came down I think within like 3 ticks and sniped my break even just because those data kind of moves that spot up a little bit. But anyway, hit the break even and then hit the high day. So again, this would be the same situation where that first trim in stops hard to break even. High day is my second trim point. That's all I'm looking for to trim. So came up to that second price target, would have trimmed here. Stop would have either been back below this high or break even still. Either way, would have got hit. But that's typically how I would have gone by that. Only got one trim in today, as I mentioned, just that managed to find exactly where my break-even stop was and decided to smack it. But all good. I found actually another thing to mention. I found SPY plays around a little bit more than the Qs, just in terms of getting a little bit more wiki action before giving the move. Like I'll show you what I mean. So at this time that came back, was doing that thing, was around 1050. Look at the Qs at the same time. 1050. Yeah, right here, 1050. Qs were already back at the high day when SPY was still doing all that. So I just found the Qs work a little bit better for me in terms of fair value gaps. SPY gave the better entry today. So, you got to just take what the market provides. But me personally, I typically like to see the entries more on the Qs than the SPY. Cool. How's that for you guys? Do you have any questions or anything you want to run over? I'm talking a little quickly here, but we got about 8 minutes or so type out what you got. Yeah, I'll just keep rambling. Of course. Of course. Any questions? Anything you want to take a second look at? No, I think I had one more thing I wanted to talk about. Ever hold your peace then. So, second thing I wanted to talk about in a second, the last thing I want to talk about was just I do zero DTEs personally. I like the way they move. I'm typically only in trades for a few minutes. I mean, I had a trade that lasted like an hour and 10 minutes yesterday, but typically it's like a couple of minutes. So I just do the zero DTEs. But if you're don't want to really deal with that type of risk, then there's nothing wrong with doing a day out or two. I just like the movement on the zero DTEs better personally. So if you're going through any type of like a rough patch or anything with your trading, I think some of the better things to do is to A, size down. Um, I typically go one out the money. So if say we're at like 606.65, I'll do like the 607 calls. Same thing for like 606.40, I'll do the 606 puts. Just because once you get those contracts in the money, you usually see a good pop on the contract values. Yeah, yeah, for sure. But two good things, size down and kind of just stick with your system because it can be frustrating at times where you're doing the same process and it's not really working. But as long as you have a profitable system that's proven, you got to just stick with it. Because I know this week's been a little bit tougher. Yeah, this week's been a little bit tougher for me. I think it's been that way for a few different traders I've seen as well. Just I don't know if it's the CPI, what it was, whatever it was, but just some of the action's been a little bit tougher. Like today was a little bit better. Got CPI out of the way, but go see you later, CJ. But yeah, but anyway, just size down, take the money out of it, and just focus on taking one good trade at a time. Don't abandon your system. Make any small tweaks if you need to, but honestly, if your system works, just keep doing the right process, just keep doing the right things, and let the probabilities play out in your favor. FPG work best next to supply demand zone. So, Kim, I don't know if you saw what I mentioned earlier, but if you're breaking above a zone, sure. But if say like you're looking for an upside entry, for me, it wouldn't be that great to be trying to buy right below a supply like that. If you're breaking it and you can use that zone as a second confluence with the FEG, I think that's even better. But there's nothing wrong with catching FEG like in the middle of like a range here and using a zone as a price target. As long as we're not like in middle of the range, I don't mean like within like chop like this. Just I mean within the middle of these zones and using a zone as a price target. Yeah. So again, I don't know if you heard what I was mentioning earlier, Frankie, but something that's kind of helped me. It was just having that like F it mentality, just having okay, I trimmed, set my stop to break even, have a clear price target. It's either hitting one of those two. Don't care about any of the noise. Don't let your emotions, don't even let it be an option for you to get out early. Set those hard, what if you need to set the hard stop, a hard price target, do that. If you need to just set alerts, kind of take your eyes off the chart for a second, do that. But whatever you need to do, don't let it be an option to get out that position early. If you have your risk defined, set your stop where it's supposed to be, set your price target where it's supposed to be, and just let it move until there. And just say, I'm not going to touch it. I'm not going to let it do anything. Just get serious about it, and um, really just be that. Okay, I just first of all, do you use EMAs? No, I don't. I don't use any EMAs. I just use the VWAP. I like to have a clean chart personally. It just kind of takes away some of the mental delays. It can kind of just get a little crazy if you have a million things going on. Already plenty to think about, so you don't need another three indicators all in your face. But there's nothing wrong with those if they help you. Just for me, it just helps to kind of quiet things down. Yeah, so personally, I like to do the first until 11 o'clock, 11 a.m. Eastern. Now I don't stream live on YouTube, but I'll do trade recaps there. Kim, it's just Chris H underscore trades. It's on my Instagram, same handle there. Um, but yeah, I like to do like the first, what is that, like hour and a half, 2 hours. I think that's personally just the time frame I trade. So that's typically where I found the work the best. But I mean, I wouldn't say they don't work in the other parts of the day. I don't really trade those times personally, so I couldn't really give you a real answer on that. But I typically trade in the first 2 hours. Got about 2 minutes here. Any other questions you guys got? Just toss them out, or we'll let this wind down. And yeah. Oh, do any of you guys know about like uploading the Zoom recordings to Discord? 'Cause I've had like insanely difficult time trying to do that for some reason. Just like it always like kind of comes out as like a separate video, not like if you know what I mean. It's not like an actual like Zoom record link. Like it comes out like an actual like video, and it's like too large to upload to Discord. I don't know. You typically use like 1 hour zones to kind of aim for breaks. Yeah, so I'll use my hourly zones, or I'll just kind of look at the hourly, see if there's any clear areas of potential reversal points, like I mentioned earlier. You say like something like this, where you see like clear supports, clear resistance, like an area like that, I'll toss on as a price target. Yeah, I trade the 5 minute, 5 minute. Okay, we got about a minute here before we get kicked off. Oh, we get kicked. But if any of you guys know about the uploading the Zoom recordings, just send me a DM or something. It'd be very helpful. Try and get this out for you guys, but trying to figure it all out. Yeah, of course. No, I'm not trading right now. It's almost 7 o'clock for me. It's a little bit late. But I just the mornings usually when I trade, the 9:30 a.m. Eastern to like 11:30 a.m. Eastern. Typically when I trade, sometimes midday if it's good opportunities, but usually just the morning. Cool. We're about to get kicked off here in a second here, but appreciate you guys for coming. Again, if any of you guys know about the Zoom recording stuff, send me a DM. Be very helpful. Appreciate it. We'll let this wind down.